Now, Darren Farwell of the Farwell Group joins us so we can learn more about investing for our future tax efficiently. Good morning, Darren.
Good morning, Marilyn. Marilyn, over the years, many listeners have taken me up on the offer, and it's an offer you make all the time as well, of a phone call or a meeting, or these days, of course, a virtual meeting. And one of the topics that comes up over and over is the desire to stay in their own home as long as possible. Listeners I speak, well, look, they're looking for financial control because financial control provides the financial freedom, the flexibility to live life on your own terms. And for many, that means living in their own home. But there's a challenge these days. I mean, generationally, it's a relatively new challenge. People are living longer than ever before, and our likely life expectancies are just expected to get longer still. That means your savings have to support your lifestyle for longer. And this is where a reverse mortgage might come in handy. This morning, I'm going to highlight how a reverse mortgage might help, how it works, a few of the cons that come with using a reverse mortgage, as well as who's an ideal candidate for a reverse mortgage, and then some of the alternatives. So let's get started. A reverse mortgage might be useful as a source of funds when you have a lot of equity built up in the value of your home. We all know what's happened to home prices in the GTA in recent years. If you own your own home free and clear, that's like a large savings account, a pool of savings that you actually can access. Particularly, this is important, if in accessing that capital, you can actually stay in your own home versus going to some of the alternatives. However, proceed with caution and get professional advice because reverse mortgages come with conditions attached. And you need to fully understand if those conditions are right for you and your circumstances. I'll address only a couple of those this morning. How does a reverse mortgage work? A reverse mortgage is a loan paid to you that is based on the value of your primary residence. It's a legal charge against your residence. And what that loan provides is a lump sum payment to you, a regular monthly payment to you, or a combination of both. These payments can help sustain your lifestyle. Now, to qualify, you have to be over age 55, and you have to qualify through an application process. However, and quite importantly, the application process for a reverse mortgage is less stringent than with a conventional mortgage. So, for example, if you own $1 million home, you may be able to borrow up to $500,000 dollars from the value of that property if you own it free and clear. And you don't have to pay any interest charges, no interest charges, until the home is sold. The interest charges are added to the amount that is due when your home is ultimately sold. And this brings us to one of the cons of the reverse mortgage. The interest rate is often higher than the interest rate on a conventional mortgage. As a result, the cost to the ultimate beneficiary of your home is a little higher. So the result of having a reverse mortgage will diminish your equity in your home over time, though the key word is diminish, not wipe out. Now, there are alternatives to the reverse mortgages, alternatives that have a somewhat lower rate but are harder to qualify for, such as a home equity line of credit, also known as the HELOC. A reverse mortgage may be worth considering if you prefer to stay in your home but need additional funding to do so. And with a reverse mortgage, by the way, a surviving spouse can continue to live in the home. If you're looking for ways to unlock the equity in your home, there are strategies to do it. However, again, it's important before choosing a specific lender or a specific product that you have professional advice. It can get complicated, and in many of these lending products, the cost of early exit can be high, so you want to be sure going in. So call to set up a meeting, a phone call, a virtual meeting. We do have an excellent article on reverse mortgages. If you're interested, we can send it to you, or follow up on this broadcast. Go to our website. We have a resources section, which in time will have the blog from our radio segment today.
Well, you always introduce new vocabulary to me. Home equity line of credit. Never heard of it. So something good to explore. And we don't know what we don't know, and thanks to you, we can know more. So anyone interested in reverse mortgages and the pros and cons of them, all you have to do is call Darren Farwell at 416-863-7501. You can get the information you need either in the booklet form or by question and answer. You don't go wrong when you get the information and then make an informed decision. Darren, thank you for that information. It was very valuable, and I look forward to learning more from you again next time.
You're welcome, Marilyn. I love the way you always mention about making informed decisions. That's the most important thing, is get the information and make the decision that makes most sense for your circumstances.
And that's what our team is all about. And you definitely start every show with solid information and teaching us things that we need to know so we can retire on our own terms. Thanks again.
Bye for now.